Oil prices are on the decline again, with WTI coming under pressure, dipping back below $20 a barrel, where it traded late on last month before the oil production deal that was agreed by OPEC and its allies over the course of the weekend. Now, the deal itself was the largest deal ever agreed, coming in just shy of 10 million barrels a day. It didn't include direct US participation, but I think on the part of the US, it seems the view is that their production is going to fall naturally in line with the market due to price pressures. So there is kind of an indirect participation here, but needless to say, the markets were not blown away by the announcement of this deal. And the bounce that we saw in oil prices has proven to be short-lived. Now, with WTI back below $20 a barrel, pressure is going to remain on these oil producers to firstly deliver on these production cuts, but also to see production cuts from those not directly involved in the deal itself. And I think that's where the next few weeks is going to be key. Now, already, for example, in the US, we have seen production fall from around 13.1 million barrels a day down to 12.4 million barrels a day naturally over the course of the last couple of weeks. So it's this kind of input which I think the US views itself as having. And if we look at the trend and the trend also with the oil rig numbers, we have seen a sharp decline here. So you could expect we'll probably see further declines in US production over the next couple of weeks. And the amount of decline that we do see will probably feed into what kind of movements we see in oil prices and whether further meetings are going to be necessary in order to try and support oil prices, support these industries, and importantly, employment in these various countries. We can see that Donald Trump has taken this very seriously up until now. He knows how important this industry is in an election year. But as I say, prices continue to be under pressure. So the question remains as to how far these can fall. The next level of support below $20 is not too far below, around $18 a barrel. Now, of course, that is still a 10% decline, but at these levels, large percentage declines is still relatively small in absolute terms. But I think there is a view in the market that unless we start to see these production cuts come into force, unless we start to see balance coming back into the market, then prices could fall still significantly further from here, even to $15, maybe even $10 a barrel, taking us to multi-decade lows in terms of oil prices. So the numbers that we see on things like inventory data, on oil rigs, on US production, OPEC production, all of these things over the coming weeks is going to be crucial in determining just how far these oil prices are going to decline and whether a further meeting is going to be necessary. The other thing that's weighing on oil prices today is the fact that we are seeing an overall downturn in sentiment. The IMF warning yesterday that we could be in for the greatest recession in almost a century since the global financial crisis. Now, this is, of course, quite a stark warning, but I think it does highlight it really does reference primarily that second quarter figure, which is expected to be extremely sharp. The OBR in the UK also warning about a severe recession, a 35% decline in output they are forecasting for this second quarter. And even this is only taking into consideration the lockdown efforts we are seeing. If we continue to see a prolonged lockdown, then this could be far more severe again. And I think if we see that way on sentiment, if we see it weigh on risk markets, then I think oil could suffer as well. Of course, oil demand is directly linked to how the economy performs. So more downbeat economic data combined with insufficient supply cuts, I think is going to continue to be a weight around the shoulders of oil prices. Even now, we are seeing that the supply cuts are nowhere near what people believe the demand destruction has been already from the coronavirus crisis. And therefore, again, to stress, the next few weeks will be pivotal, and it seems like downside pressures on oil are going to continue at least in the near term until we start to see evidence that these production cuts are working.